All right. Welcome back, everyone. Another episode of Chart Talk. We're going to go over the major markets, major sectors, top ideas, and we also have a couple outside questions that we're going to go over today. We're going to go over the big picture model. We're going to go over um, the updates with the Discord, how to set the new commands, and some fun stuff like that. So before I hopped on here, I was looking through the utility sector. Again, utilities have been the one key sector right now that has been breaking out to new all-time highs. But let's back it up a bit. So starting with the broad markets, again, the Qs have definitely been leading this market higher. This has been the overall channel. The index, the Qs, and the S&P pretty much have both been trading in lockstep for the most part. Again, last week, Tesla pretty much called the short-term top a few days early. And then we had the day to take notice on Friday with the market opening at new all-time highs and closing bearish engulfing. This was definitely the day to take notice, the end of the day to get much lighter, which most of us did. We saw the gap down coming into Friday. And again, we were still within this channel. Everything seemed fine, but again, giving the bearish engulfing day to take notice and then the gap down into the support area of the channel seemed that it would be the time to kind of pump the brakes a little bit. Now today, bullish engulfing, we're filling the gap. Again, very mixed reactions to the downside, mixed reactions to the upside, and closing dead smack in the middle of this range. So again, for most of us today in the chat, it's been very quiet. Has been a lot of setups. Again, Friday was definitely that shakeout day. You kind of have that snapback today, and it's kind of frustrating traders on both sides, the sellers or the buyers, because we're just kind of stuck in limbo with where we're closing. So until this trend line breaks, we don't fight the trend. We just rock with it. We do what we can do. But it's very tough this week given the initial close today. And again, we saw the same thing, maybe a little less aggressive. Again, the channel and the Qs have, a little more defined, but we can still see the shorter term trend in the S&P, again, still intact. And what I was trying to articulate in this week's newsletter is that within these orange lines, that's my thinking moving forward, is that the market, shifts out of this breakout stage probably a little bit more slowly than we're anticipating. And we get some range bound trading with, 640 to 650 being the upper end area of resistance, with the 600 to 610 area or 590 to 610 area being that support area where the market will now flag out a much wider range because each of these subsequent flags have just gotten tighter and tighter. So we see this broader flag here, flags out for a few months. We see this next flag, about a month, tighter consolidation. And then we have the really tiny few day at high Mickey Mouse flag. So we're seeing each subsequent flag getting tighter and tighter. And eventually that has to break and expand and a new pattern has to form, which is pretty much what we saw at the end of the week, Thursday and Friday's action, pretty much breaking that tight consolidation, letting the market expand. And now maybe this is the newer range the market trades into. And ideally we see a push to 640 in time. But my thinking still, if we break this trend line in the coming weeks, that this is probably the range that we see the market trading for the next few months, which again, this is a huge range, 40-point range here, a lot for us to do. Again, it's very tough when, the ranges are so tight up here. It's hard to really pick a direction. And then lastly, on the major markets that are worth noting, again, the Dow 30 largest launch cap names in the market. Again, in this very textbook blue flag breakout that's been forming, we had that really tight flag last week. It shook out that range, and now, this is the new kind of 20-point range. This is in, again, either this is going to be a short-term topping pattern and we rolled down through 430. But as of for now, everything seems to be trading how it has been for the last couple of months and probably just trades within this range. And we eventually see this 450 breakout. Now, sector-wise, as I mentioned when we first started, utilities been on fire. Not really the best sign we want to see. Again, when your people are running to utilities, they're a little bit more fearful. So again, a market all-time highs and people running into utilities, a little bit of a red flag there. Not the best sign to see, but for the sector as a whole, we saw that retest of the prior resistance level. Utilities couldn't break this level, breaks it out, pulls and retests, backs into it, can't break lower, and no surprise, the market has ripped higher. And again, ironically, these arrows pretty much followed it to a T. So good to see utilities breaking out. Broadly for us, swing traders, not the best sector we want to see breaking out. Again, tech and semis definitely have been leading the market overall. Again, very clear trend here, very clear trend line. Let me get rid of some of these lines here. But again, data take notice. I'm not going to Groundhog Day the same example, but we can see a very strong channel. What we want to see until this area breaks. And then again, for semiconductors, still forming a very tight flag here, like with utilities, semis, all-time high, retests, and breaks back out. And like the utilities, backs into the prior resistance level, turns into support. And now we have this tight little flag at highs. Again, the sector has came an insanely long way since the April bottom. So up here, this is where the action just gets a little more difficult. It gets a little more choppy because the easy move is over. This is the super easy move. This is the frustrating kind of end-ish summer chop that we need to know to just pull back on. Less is more. Be patient. We don't need to be putting on risk every single day. For myself, from the active account, SMCI got stepped out of, Cisco got stepped out of, came into the week flat. No problem with that. So the only real name on the radar on my end, following up with the Dow 30 blue sky breakout, we have Walmart, a Dow 30 name with a very textbook bull flag that's been forming. We can even see going back to February that this level has been resistance. We can see 1, 2, 3, 4, 6 attempts at this 100 level. So eventually this 100 level is going to have to break. Maybe it goes tomorrow. Again, it closed right under that level today. High of day was 99.91. Again, for the newer guys, this is exactly why we have buy stops above the whole number. The breakout's 100. We want to be buying when the break is confirmed above 100. We don't want to be kind of chasing ahead because then we get in a day or two early when it's not fully ready just yet. So if this was to go tomorrow and the market continues to climb higher as it did today and fill the gap, I'm not going to really want to give this Walmart versus 94, but we can see as of last week, couldn't really drop below 97. So if I can give this thing $3, 3%, and initially aim for a move to kind of retest this first high to take profits there, kind of a 2-to-1 kick. That's the plan so far with this name. And again, watch list for the weekend, very small. This is pretty much my only focus going into tomorrow is this Walmart. So going over my 2 trades for last week, and if you guys have any trades that you guys want to go over, by all means, we can I can unshare. You guys can hop in and go over into your trade if you have any questions. But for my SMCI, we mentioned last week where I got shaken out. I got in, got shaken out, break even. And one of my key lessons was keeping a close eye on those names that you get shaken out of for a re-entry. So nothing technically failed in SMCI when I got out. I just got out break even, and it was still flagging, and I was willing to buy back through those highs, which I did. It broke out higher the following day, was up 7-8% that day, and just took profits. I got stumped out a little bit, took profits into the up move, and then got stumped out of the rest with the market capping down on Friday. So now, again, it's probably will chop around. I'll take the average 9% gain in the name and wait for the next setup. This is probably the new range this name is in, super wide. So not really rushing to get back into this, but if it pulls back into this range, sets back up, maybe there's another trade where I can buy back up to 54 again. And again, just trade this range. And that's my thinking with the broad market as well is, we can definitely get back up to highs, but maybe that's going to be the short-term top for the next few months. And we want to just take profits into resistance, wait for those pullbacks, and take advantage of those support buybacks. Now, Cisco was the fail trade this week, which again today it looks like nothing happened. But the wedge that I was keeping an eye on was this wedge here. It triggered me on Thursday, immediately reversed, closed low a day, didn't technically fail, but again, not the sign that I'd be looking at for a breakout. So I sized down going into the following day. And on Friday, again, across the board, we had the gap downs. I'm not trying to be the hero and hold this thing and hope the market reverses, which is today, but that's not, how we trade. So made 9% in SMCI, lost about 1% day one, lost about 2% on the gap down, lost about 1.5% in this trade, but it's still technically in this wedge. Maybe you have to just draw, move the lines out a bit more. And maybe this name needs a little bit more time to really go, or maybe it goes tomorrow, who knows? But this is not going to be a name that if tomorrow it's breaking again through this 69, I'm going to chase it back. I'm going to wait a little bit. Same with SMCI. Give it a week. And if it really tightens up, I'll look to get in. But as of now, both names are basically off the radar, with the main focus being, a momentum buy through 100 tomorrow and trying to keep that risk tighter, either versus 97 or versus 98. That's pretty much the main focus for the week. So is there any charts before I move on to some of the Discord updates, big picture model, 90-10 allocations? Is there any ideas that Vic, Joe, or anyone else wants to go over while we're looking over some charts?
For Apple, I was looking at it.
All right, so I cannot hear you,
Um,
Adrian. I can see your mouth moving, but I don't know if you're talking to me, if you're talking to
uh,
someone else, but
uh,
can't hear.
for Apple, I've been looking at it.
All right, so we're going to move on a little bit. We're going to jump onto the big picture model. Our friend Brandon Ford had some questions about it, so I'm going to briefly go over the big picture model, a little bit of back history about it. Again, a lot of you who've already used it probably know all this stuff, but for the newer people, I'm going to go over this uh, very briefly. So, a little background on this: when I worked at Morgan Stanley many, many years ago, this was the model that I put my clients in. Basically, most advisors sell you on mutual funds. We do our best to educate you on why we avoid them. And the main reason that most mutual funds fail to match market returns is due to the high fees that these funds charge. And that again is where the advisor, like myself, is where we would make the money. If we have a, 5% front load charge for a fund, you invest 10 grand, the advisor would make $500, and they're going to be incentivized to sell that fund because that's where they get paid. If you're putting that same person in this fund and the cost is 0.1%, we make $1 per 10,000. So you can see where the advisor's own best interest will lean towards why that mutual fund would be better, because they're making $500 versus $1 to put them in something like this. But this was the model that I put my clients into. And after I left Morgan Stanley, this was the model that I continued to educate the members on, because this model worked so well. So you can see over here, since 2020, the fund has had a total return of 82% since August of 02. Again, this is how they track it. But that's the return so far. So you can see they give you some hypotheticals. If you copied this model with $100,000 back in August 5 years ago, your account would be worth $82,000 more. You can see the dividend yield, 1.7%. So for every $10,000, you're going to make $170 a year. Again, these are the sprinkles on the sundae. These are the toppings. These are not the main ice cream cone. It's the extra benefit. It's the free money that comes in, and we can't complain about the extra 1.7% a year. The last key factor is the ratio. Again, basically non-existent. It's 0.1%. It's basically a rounding error. And this is why this model performs so well, is that each year there isn't 1, 2, 3% coming out from the mutual fund side where they're actively managing or passively managing it. But when it's a very passively managed portfolio and picking the proper funds, I always focus on Vanguard ETF since they're best in class and lowest cost. You don't even see the expense ratio as an expense as the model works. So this is the big picture model. Again, you can use it for free on M1. I have no affiliation with them. I don't get paid to market this model. It's just the one that I'm personally invested in, my family's personally invested in, and anyone that I assist through M1, pretty much everyone's in this. And it just worked very well. And the main difference between buying something like this or the S&P is that each sector is as evenly allocated as possible. And what you can do with that is when, for example, right now, utilities are doing very well, while healthcare and biotechs are not doing so well, is that when your position in healthcare is going down, that 8% allocation might actually only be 6%, where your utility allocation, that's 8%, with that sector at highs, might actually be 10 or 11%. And on M1, it will show you your target allocation versus your actual allocation. And again, it's not going to always be perfect because these products are consistently moving. But the automation side that M1 is very good at is they see that and they say, okay, utilities is 11%, but it should be 8. Where healthcare should be 8, but it's 6. So as you're putting in money every week or every day or every month, they're going to know we got to put more money into healthcare to get that 6% back up to 8. And when the utilities should be 8 and it's at 11, they're going to hold off on buying it until everything else is even again. So it's a very good allocation tool without you or me or anyone having to really go in there and buy the one share or the half a share or do any of this. And these were things that many, many years ago with TE, we taught this, and it was very hard for the person to consistently keep the portfolio evenly allocated, where this does it without even thinking about it. So again, that's like the kind of big picture explanation of what this model does, why we do it. Again, if you were just in the S&P, you cannot take advantage of the rebalancing. You're just basically buying, consistently, which is fine, but you can't take advantage of the active rebalancing that this will do, or just the passive, portfolio management that it's going to do when the markets are getting kind of crazy. So this is why I emphasize this model over the S&P, because this should follow the performance. And then if you're increasing those allocations during bear markets, corrections, things like that, you're going to get all these really good deals. And you can, beat the market's returns if you're willing to put money to work during those more volatile times. So that's the big picture model. Again, the 90-10 allocation method kind of ties in with that. So I'll just stick on this point for now. 90-10 allocation is what I try to teach you guys in the past with TE, and what I will continue to educate everyone moving forward on. And what the 90-10 allocation is, very simply, is the goal for myself or anyone that's here with big picture is you want to keep the majority of your money in market matching approaches. Big picture model, investing in the S&P in your 401k, things like that, where you're matching the market, very cost efficient, very low cost expense ratios to buy the S&P or to be in a fund like this. So all the big assets, the bigger accounts, for myself personally, it's in models like this. It's very passive. And I know I'm buying every day. And then the 10% is the active swing trading account. And that's where I can be more aggressive. I can buy, SMCI and make 10% in a week, where this might make 10% in a year. And the question that the people that do this, it's not a did I beat the market or did the market beat me this year? It's which allocation did better. Was it the passive model? Was it big picture? Was it buying the S&P? Or was it the active trading? And that's typically questions that I tend to do at the end of the year because you want to see how the performance was for that year. So at the end of this year, I'll look at big picture, I'll look at my active trading and see which one did better. And a lot of times the big picture does a phenomenal job. It's done 80% since 2020. It's averaging 20% a year without doing anything, showing passive. So for me, for peace of mind and just being able to get as much money in the market, I always lean this way. But for the person who wants to trade more and trade more actively and increase their potential income, eventually you're going to move the needle the other way. So it can go from 90-10 to 80-20, but that's a discussion when you can compare these two approaches, the passive and active, and then see which one's doing better. So that's that 90-10 allocation. And that's something that I personally do. And something that I hope you guys follow as well. So I did just see Joe's message. Just give me a second. All right, so AEM. Give me 1 second. Let's bounce back to this name, and then we'll go into some of the Discord updates. So reported earnings on the 30th. Let's see. Name, I guess we were trading this many, many years ago in 2017. So phenomenal blue sky breakout. Okay, so for Joe, just while you're moving, I know you're a little bit newer. When you're scanning, again, I have a weekly chart up here. This is going back. This is a 20-year setup in the making. So this is, I'm just broadly talking about this thing right now. This, if you can find this chart pattern and that entry, that's all you want to focus on when you're scanning. And again, this took 20 years. This was going back to, pretty much 08 until now that this name traded in this 60, 70 point range, you can say. So what I can tell you is that in time, this name should get to, so if you measure this range that the name's traded in, this name is probably going to get to, we'll round up to probably 160. So this massive breakout, we all missed it, not the end of the world. Name has been very, very strong. Let me get rid of this massive arrow. Very strong in this channel. And in reality, by end of year, if I had to make a bet, this name would probably be closer to 160 than it would be closer to retesting this 80 area. So that's kind of the broad outlook of the name. But now we can zoom in a little tighter. So we can see, it changes to red. So we can see name runs up. We can see it start to flag. We can start to see the buyer stepping up. So we can see this is the pivot low here. Buyer steps up, buyer step up again, buyer step up again. Very similar with Walmart. We're seeing that consolidation get somewhat tighter and tighter, not extremely tight, but we can see the same premise. There's a key level of resistance, and the buyers are stepping up to continuously support the name as they get more impatient and try to push for a breakout. So the real entry is, pretty much was that 127 area. You could even say, 130, but this is kind of like this is a Mickey Mouse flag. This is a very tiny consolidation. Not a lot of buyers or traders are going to be looking at that. This pattern, much bigger. And again, before we saw that 20-year pattern, massive pattern. So as the consolidation periods get smaller and smaller, you don't get the follow through because it's only these few people who are really looking at the name. So right now, I don't really see a setup other than just blindly buying at highs. If this pulls back in the next coming couple of days and you can find a buyback back up to this 127, probably worth keeping on the radar, and I'll add that to the watch list. But right now, not much to do given where it's closing. And okay, cool. All right. So I'm going to move on to some updates with the Discord. So just give me a second. Okay. So a few updates on the Discord. Main thing is, let me go to the alpha chat, is if you hit this little backslash button next to your shift bar, you're going to see these automations here. So if you want to pull up a chart, type in the name, and the daily chart of Apple is going to post. And if you wanted to set an alert, you can put oh, okay. Well, here we go. Okay, so if you want to set an alert, backslash, click select alert, type in the ticker, you type in the price you want the alert to go off at, and you also can add a message. Again, if you're setting your own alert for the group and you're looking at this trade, I'd highly recommend putting in a message of what you're looking at, what do you think the entry is, what do you think the stop will be. But this is something that's new for us where you're not beholden to just set alerts that I set. If there's names you really like and you want to be alerted about them, you can utilize this function and set those alerts for yourself as well. So that's definitely a new feature with the Alpha Chat Discord. Again, I know there's a lot going on with the Discord. We have a designated onboarding channel, which again, I've been working through all the calls with you guys. So I do appreciate everyone who's been setting the calls, and I've been working through this list. But ideally, I've been setting it up where once you get through this onboarding program, you really shouldn't see it anymore. So it kind of declutters it on your end. And if for some reason you still do see it, let me know, and I can go in and tweak the settings. I've done a few of these with Mr. Ford, Brandon, who's been very helpful, where if I have to adjust a tag, you let me know, and then I can make it. So once you're fully onboarded, this channel should be gone. Again, for the joining thing, same thing. For everyone who's already signed up, appreciate it. You made my life much easier. For those who haven't, not a big deal. I'll just send you these links after we do our onboarding calls. And for anyone who has the tax questions, you'll see it in here. And down the road, any of the fitness guys want to work with my trainer, you can schedule a call with him as well. So we have some of the funner channels that we brought over from TE, mainly the book club. In the past, I was shipping the books out to everyone. Moving forward, to make it easier for everyone, I'll just be posting the books that I'm reading at the time, or posting excerpts that I find useful or helpful. And I hope that you guys do the same. Again, a lot of the book recommendations I've done over the years have come from members saying, this book was great. I really, really think you'd like it. And that's, just the benefits of this open club. Comedy Club, self-explanatory. Goal setting. Again, if you want to set your goals in there, again, for me, I have one where I'm trying to break a time at my local track. Instagram, you're going to see the post from our various Instagram pages. Just like in TE, I have a multitude of Instagram pages with all posting kind of different things. One is just videos, one is our more popular content, and things like that. Again, for leaving the review, new business, no reviews. I have created all the new social medias and sites to leave reviews. So the main one right now is the Facebook page, and all the books will be updated and republished with new lessons and stories coming very soon. So this will be a place where any of you guys want to drop a review, greatly appreciated. Again, the networking for any of you guys that have whatever you guys do professionally, and you feel that any of the members might be able to utilize what you're good at. Just drop what you do. Again, I'm talking with Greg here about how to bulletproof this Discord so we don't get a million of the Bennett scammers again, which so far my basic approach has been removing all of the Discord links publicly so no one can just walk into this Discord. They have to go through a process of completing a questionnaire before speaking with me, and then I'll invite them. So the scammer is going to have to talk to me as them, and I'll know very quickly that they're obviously not interested in trading. So for now, the door should be shut on the scammers. But again, the emphasis here is just posting what you do so someone else can benefit from your skill set. You guys can collaborate and work together. Again, for Twitter, we have designated channel for the big picture Twitter and then some of the funnier lot accounts that post from time to time. We have the new YouTube page that you can click here to subscribe to. Again, starting from scratch. So anyone who subscribes, greatly appreciated. And then just like with TE, we have a designated channel for the newsletter alerts, which you will get those notifications in real time. I've already seen the open rates this past weekend, and they're pretty much the same as what they were with during the TE days. So it seems like everyone's getting the newsletters with no issues, which is always a good thing to hear. Again, all the alerts specifically will post in the alert channel so it doesn't get cluttered in through just the day-to-day communication. You'll also see the big picture notifications, just kind of posting in all of them simultaneously. We all know what the alpha chat is. And then again, just to declutter some of these channels, I have one for just a watch list. So this is a bottoms up approach. So we have trading as the first one, which again, big picture, names that I'm keeping on the radar, orders I have in the system, stops for positions I'm in, and recently stopped out trades. So these are all watch lists that update in real time based on my entries and exits. So in real time, if you want to see what I'm in, you can see. Again, for orders in and stops, there's nothing. So I'm setting in cash. As we're going again, bottom up, we have all the major sectors here. So right now, utilities doing very well. You can scroll down to utilities, pull up that watch list, scroll through some of those names. And again, taking that bottoms up approach, then we have the major indexes, Dow 30, small caps, NASDAQ, S&P, or if you want to do a bit of a bigger scan, you can do that as well here. And again, you can copy, save any of these watch lists to your own TradingView account. And these are all the watch lists that I'm currently using to scan charts every day. So moving on, we have some of the bonus pages. Again, the 401k club is for the individuals that have 401ks, 403bs, any of the retirement accounts that you can't really utilize the big picture model in. This is where we can kind of talk and I can help you as best as I can with the plan that you have. You can see here, one of the members in here finally reached $100,000 in their 401k. You can see they're up about 20% since last year. Very similar performance to the big picture model, what it's averaged over the last 5 years, which is 20%. So this is what this group is for. Again, Airbnb is for the individuals who are looking to get Airbnb units or have them already, where we can discuss, some methods and ways to grow it. We have the financial advisor group. So any of the members that are licensed or studying to be licensed, we can all communicate there. And this goal setting page is duplicated, so I'm going to delete that. And then for the tax clients, you can see here on the left-hand side, the 10-step process, similar to our 10-step program. From talking with you initially until your return is completed, we go through 10 steps. The initial 4 are client focused, meaning it's something that you have to do on your end, provide a return, sign an engagement letter, fill out a questionnaire, all very simple things. And the remaining steps are all the things that myself, Skender, Mary, and everyone else on the tax team will handle. But in here, you will know throughout the tax season where you're at in the queue. So if you are in step 1 and you want your tax return done, you got to get through to step 10. And if you're in step 8, you're ready for a review phone call, you're pretty much at the finish line of your return being completed. So this is more client facing. This makes the process more transparent on your end. So you know exactly where you are in the process, and you're not relying upon a phone call or email or text from myself letting you know where you're at in the process. So this will make it much more seamless for everyone in the new tax year coming up. So that is the main gist of the new Discord. Again, I'm constantly tweaking and deleting some channels and moving things around until it kind of gets all hammered out. But for the most part, the key factors here are all set up. Again, for somebody's requesting access pages that are related to your careers or things you're focusing on, I want to keep those locked so it's not a bunch of people just chirping about financial advising when they're not actually actively trying to become financial advisors. Same for the accounting group, same for the bookkeeping group. Those are more for the individuals that we're going to be bringing on as new hires to the tax team. But again, we want to keep those private so Skinner could give the tax advice or education needs to the new people and not to everyone just asking sillier questions. So if you guys have any specific questions about the new Discord that I missed, please let me know and I will go over it on the next call. So I think that pretty much covers everything for this week. Again, if any of you guys have any questions that you'd like me to go over, just unmute yourself and we can do that now. And if not, thank you guys all for popping in again, and I'll see you guys in the chat. All right.
Thanks, Bennett.